The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 30th Fireworks Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. You can call in right now, 877-927-6648, internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. Inside that subject heading, just put radio show question, and we will get right to it. And, of course, inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic, fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 75 points at 21,362. S&P is up 7, trading at 2426. And the X100 up 8 points, or 5661 is what she's printing out. Russell 2000 is flat. The semis are off 3 points. Gold is down $4. Silver is off 1 penny. Light sweet crude is up 72 cents. She's traded at 45.65. That's headed to its next level. That is printing above any resistance. With regard to market profile wise out there, what's the XLE doing? Up 28 cents. She's out at 64.91. Leading the charge here to the upside dollar wise, it's Coherent Inc. up $6. Priceline is up 6. Nike is the big mover, up nearly 10%, or $5 out there. Acuity Brands up 3. Hanes Celestial up 3. Tesla's up $1.55. To the downside, it looks like my system is a little screwed up here. I've been having some internet issues basically all day. Hopefully, we're good for the lunch hour here. Regeneron Pharmaceuticals off $15, down 3%. Cara Therapeutics off 35%, or $9. So obviously, they got some kind of a bad news from Bad News Bears there. Sturm Ruger, the gun folks, they're down 8%, or $5. Google's off 2. Bluebird Bio down $1.80. Athena Health off nothing, 34 cents. Why are we even talking about? Yeah, there's something wrong with that screen. I don't see. I think. In any event, it doesn't matter, because we're going to go ahead and look at whatever it is you want to look at. In fact, you know what? Well, what do you want to look at? I don't have any questions set. So what do I want to look at? I tell you what I'd like to look at. Even though the month has not come to an end, it is June 30th. It is the last day of the month out here. So, and I always believe that the most important thing that you and I can do is to make sure we understand what is the big picture. What's the market communicating to us with regard to the big picture? Once you understand the big picture, then you can go ahead and start planning a strategy for the smaller type pictures. To me, the big picture is take a look at what's going on a monthly basis. So let's go ahead and let's go through the indices out here and take a look at what the message is to us. So as we take a list of the Dow Jones that we're looking at right now, trading at 21,363, another nice month to the upside. That's a beautiful thing. I would ask you this question. Is that the sign of a top inside the Dow when you take a look at this monthly chart? In fact, The last time that the Bears actually showed up was right back here. This is June of 2000. It's got to be 2016, a year ago, June of 2016 out here. When you see that nice little bearish engulfing candle, and that really would have set up a resistance level of around 18,313. Price was able to cruise right through that at the when was it able to cruise right through there? Where are we at? In the December, looks like, yeah, December, and then January. So that would really become a support level. Of course, we could say that one of the support levels would be Stevie's red line, 20,569. As long as price is above that, there's no sweat. So there's nothing bearish. And I asked you the question, or I posed the question, is there anything bearish about this? Now, somebody might have answered yes. Here's the cool thing about the way that the markets operate. If you come back to the high that was formed out here in November 2000, and the last high, the high that I'm referring to before the bear market began, was back in October, right, of 2007 out here. And as we take a look at, you see the market, the buyers and the sellers have but just really one responsibility, and that is to paint for you and I signs or signals or Japanese candlestick charting. There will be a bearish reversal signal that will occur if there's even the potential of a top or the market that wants to pull back. And inside the Dow, we don't have it. We did back in 2007, gave us that nice signal. Same thing if we go ahead and we flip back to 2000. Can I get a say? Here we're back at 2000 out here. Nice little dark cloud cover that was followed up. And price got below Stevie's red line as well. That was a big help, a big assistance out there. So as we take a look at things right now, the answer is no. Now, we've probably spent too much time on that, but actually, now that we've done that, it makes it a lot easier just simply to flip through and take a look at the different charts. Let's look at the NASDAQ composite under some pressure out here. And if we take a look at this chart, now, you're going to see some green and red boxes that are on my screen. Those are that is a system that I developed. That's the Rhodes Momentum trading strategy system that really helps you to understand the strength or weakness inside the market. When you see these red boxes appear on my screen, it's actually not just telling you strong, it's telling you super strong, and that is on a monthly basis. So I pose the question to you, with all the rigmarole that you and I have seen, is there a bearish reversal signal at all on the NASDAQ composite? The answer, you already know that. It is absolutely, positively, completely no. Price would have to get down below 59.35 and change out there before it could get my skirt up into a tizzy, and I would hope it would be the same for you as well. If we go take a look at, so no bearish reversal signal there. If we look at the transports, let's go look at the transports out here, see what kind of signal they would provide to us. We can see the transports are trying to take out the resistance from about 4 months ago when it created a nice little bearish engulfing candle. You see the bears out here, they are out here in force showing us where they are located. We had a nice little shooting star back here, looks like around December. Sometimes it's December or January. Sometimes on this charting system, it's off by a month with my little cursor out here. But you can just see where the bears are lined up. And in the case of the transports, if they clear 96.31, and you are a bear out there, and you believe in Dow theory, you'd have to ask yourself, well, why do you believe that? Transports, they're up at their highs. That's the other thing. When markets make highs, when the bear market makes a high, it's adios, amigos, see ya. You know, it doesn't give you a chance to get out. And that is not what it is that we're taking a look at inside the transports. That is for sure. We come back for this break. Hey, how about the S&P 500? Just before we go to breakout here, is there anything on this chart that looks bearish to you? And the answer in the big picture is not a chance. Steve Rhodes with TFNN. Be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 75. S&P is up 6. And for Dave in Germany, he would like to go take a look at Foot Locker and eBay. So let's go do that. And let's look at a couple of different charts out here. Let me put my Ninja Trader charts up on the screen for us. This is the monthly chart. So, and Dave is looking for a place to enter to the long side. So when we take a look at this monthly chart out here, you're going to see a couple of different things. Now, just like we were just, it was like a volley, like we're a little setup there, because I was talking about how the mission of buyers and sellers for you and I is for them to go ahead and paint signals on charts, and then you and I just read those, and we know exactly we know the most fundamental thing about what's going on inside the specific chart that you're looking at, because it's being communicated to you based on what sellers and buyers are really doing out there. And when those bearish reversal signals occur, especially at the completion of a pattern, such as here in the case of the monthly chart for Foot Locker, right? We want to understand the larger picture here. So when Foot Locker was making its highs, this was several months ago, it was moving higher, doing less relative energy, let alone it was singing in that key of G, that seventh wave move to the upside. And the way that we knew that that was a high, or should be a high, was the mere fact that buyers and sellers painted that shooting star. Now, the shooting star is the exact opposite of a hammer candle. The beauty of the shooting star is, I like to say, it either works or it doesn't, which means once it forms, that very next candle should be lower out there. And in fact, that is what took place. You can see out here when it was, let me get my crosshairs going, when that pattern formed. Now, what's also interesting, because there's a couple other patterns that you and I like to use out here. Price did try to get back up there, and in doing so, back in May of it must be April, because we're in June, so it must be April. In April of this year, it made one of those TD9 count setups out there, and then gave it up with another bearish reversal signal, the old bearish sash. In this case here is a wide-ranging bar. Now, Dave's looking for an entry point. As I look at this chart right now, Dave, I would say the place to be watching for might be this little red dash line out here. That red dash line is priced somewhere in about the 34-ish area, and that is a support level created by Tom DeMark's system out here, and that's what I would be watching for. In fact, you're going to hope that is really where Foot Locker would find a bottom, because there is at least a base out there. There's no other base until you get down to that level. So what we know right now is that on the longer term scale, we're looking at about 34. So is there anything that suggests otherwise to you and I? Let's take a look at the weekly chart here for Foot Locker, and we put it on. So we know we're looking for about 34. Here we can see prices slice through one of those swing points from back in around July of 2000, so about a year ago, as well as down below the red dash line out there. So that too is communicating to you and I that price wants to move lower. That is on the weekly chart out here. Let's take a look at the daily chart. For the daily chart, let's actually pull up my e-signal chart out here. So let's do this. And here we'll be able to more clearly and easily see volumes. You can see recently Foot Locker back on June 21st gapped down with volume of about 13 million shares out there. Price here has just simply been able to bounce up into the right around the TAS market profile on a daily basis. Now, on these charts here, if I switch right now, if I switch to a different time frame, the color is going to represent the profiles for that specific time frame. And what we can also see is maybe what Foot Locker is doing here at the moment, Dave, is just simply, let me get the yellow horizontal line out here, just trying to maybe fill that gap, get up to resistance 50.22. Can this form a bottom before the price level that we were looking at? And the answer is, of course it can. What would we see if that were to occur, Dave? We would see a sign of strength. We would likely see a sign of strength out here. I would say more so what is likely to occur in Foot Locker is for this to get back and test. This is a daily chart that we're looking at, that June 21st area. Anywhere from 44.87, which would be your preference. And if price gets below that, it just confirms what you and I were looking at on a little bit longer term chart. So I hope that assists you with regard to Foot Locker. He also wanted to take a look at eBay. So if we go take a look at eBay out here, and let's do the same thing. Let's start with the longer-term chart. Let's do it with my same system, NinjaTrader, where I have all of my special tools out here. And as we take a look at eBay right now, the monthly chart looks pretty good. So you're looking for an entry point. So this one's going to be a bit more tricky, because really your entry point is going to have to be on some type of pullback, right? If we just do some simple wave counts out here, probably eBay is only in its third wave. So you would say on a monthly basis, pulling back to 33.20 this is what the monthly chart is communicating to you, pulling back to about 33.20, and you're at 34.84, so you're $1.50 or so. 60, 70, whatever the math is on it, a bit higher out here. So that's what the monthly chart for eBay is communicating to us. That's a good-looking chart. Nothing on the monthly chart that suggests and you were thinking around 27 is what Dave is saying. So let's go take a look at the weekly chart. Can you see us? So we just kind of walk through this one at a time, makes it easy. So long term, we know where support is. Now we're going to see where we'll call it maybe intermediate term price for eBay. Where is support here? So is this really trading at 34.82? I don't know why this monthly, it's trading at 34.82. And you're thinking 27. You're thinking 27. Well, you're looking for a really big pullback then, all the way back down into December of 2016. And so how can I help you to make that case? Let's see, is there any typo? Let's see where we're at in the weekly chart on wave counts. Maybe you're at F, but quite frankly, maybe you're really only at A. It's an F and A, if you know what I mean out there. So a bit of struggle on the weekly. Let's go take a look at, now we're at the daily chart. The daily chart here, there is, right now it's trading inside that daily profile. If you're going to get 27, you need to see this close below 34.73 out here. Even if we were to get an A to B equals CD to the downside and create a Gartley pattern for you, let's take a look at that. That right now is only going to give you a price projection of 33.36. maybe $32.65. If it's going to get to $27, you must know something that I don't see on the charts. Now, hey, 27 would be a great buy potentially, but I don't see anything in the charts on eBay that suggests that this thing is really topped and that it's going to go ahead and head lower all the way back into that 27-ish area. So that is what the charts are communicating to and I, at least the way that I am reading them. So thanks for asking about those. I'm going to check the email here real quickly and see if anybody sent any question. If not, we will just simply carry on our wayward son, something like that. I don't even know if those are the correct words out there. Oh, Tom wants to take a look at LABD, and thanks for Tom for putting radio show up there. It makes it so easy. Good afternoon, Steve. Thanks for your advice yesterday on LABD. I was wondering if I should keep my position in LABD until Monday. I'm long for the past 2 days, and I am in at 646. So let's go take a look at LABD. My recollection is we look at this, but we also look at, in essence, the single. This is the biotech, and you are long this, which is like being long the IBB. This is Steve Rhodes with TFNN. We're going to go take a look at LABD when we get back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 85. S&P is up 7. So for Tom, we're taking a look at, he's in the LABD. He's taking the long position for the 3 times LABD. He's taking for the 3X biotech. LABD, S&P biotech, bear. That's the, is that right? Oh, you're in the bear position. You're in the bear position. No, you should not hold this over the weekend. Okay, here, let me show you. I thought you were the bull side of this. Flip it to the. Actually, I don't really want you necessarily to do the triple on this, but should you get out of the bear side of this trade and hold it over the weekend? I think the answer is yeah. I take your profits. Here is what I'm going to look at the IBB, because I just think the information that we're going to garner here is better. And this is why I'm suggesting that, Tom. As we take a look, this is a 30-minute chart. Now, this has got all the pre-market stuff too, so, and post-market, but that's not such a big deal out here. What I want you to notice is where prices now pulled back to on a 30-minute chart is really into a little sign of strength, which began at 9:30 on June 21st out there. Decent volume at the open on that 30-minute. It was 621,000 shares. Follow through on the next session, 637,000 shares out here. And yes, we are in holiday-type trading, but the pullback has been on light volume. And you have a nice little wide-ranging bar now. Is it possible for this to pull back into 305 and therefore giving you a little bit more strength inside LABD? Absolutely. But I don't know, it is. But you're just coming back with just such light volume. I believe that the message of the markets out here, and I'm going to go away from, I know that you're more of a shorter term type trader out here. And again, I think we talked about this yesterday, just the way that this is pulling back here into that sign of strength from June 21st with 5 million shares. You're 346,000 today. You were only 1.4 yesterday on Freak Out Thursday, so to speak. And this is a long. This is a long position. We look at the monthly chart, right? So we just kind of step back, get our head wrapped around what's this thing doing on a monthly basis out here. This looks like the IBB is going to close above Stevie's red line. It hasn't done that. Last time it was above Stevie's red line was back in July. It was up at the highs, as it was making highs back in July 2015. So this is communicating to you and I that there is a change in trend. In fact, you're over the bearish engulfing from last month. You're over all of the bearish reversal signals here on a monthly basis. This says the IBB is going to move higher out here. And that's a beautiful thing, because really all the damage that was done when you really pull this back and look at it, it was barely a retracement. Where it retraced to, remember earlier we were looking at a chart out here, and we said, well, maybe it's going to pull back to that red dash line that might have been Foot Locker or something. You can see the reason why I go for those target areas is you can see here, in the case of the IBB, that's in fact where it found support and it tested it. So it's very cool, a set of tools, Tom DeMark tools out there, to be able to assist us with where price is likely headed to. In this case here, this on the monthly chart, the IBB wants to head higher. Now, maybe it pulls back to 301.92. I don't know. But right now, closing above Stevie's red line is a very important bullish signal for each of us out there. And so I can answer Tom's question, even if I can identify that it might head a little bit lower out here. The weekly chart, this looks also bullish to me. You'd have to get below 300.27 for me to change my mind. Now, this says that prices headed up to this gap out here from back in January 2016. That's what it's going to deal with next. But if this gets above 324.43, it's all the way back to the highs. And it's only about $22. It would only take another week like last week in order to be able to get up there. So that's the message of the IBB and the LABD. And I say, yeah, it's 4th of July. Take your money and run out there. You're good at this. You will find another trade. Let me take a quick peek, see if there's any other requests to Mundos out there. And if not, no, I don't see anything else. I don't see anything in the den. Dave B. from D.C. says, Steve, bulls get roasted over the weekend. Too many cookouts. Oh, why is that, Dave? We are in a sideways-ish, if you want to call it that, sideways to higher market, really, when we take a look at what's going on a monthly chart out here. It's a chop fest. It's horrible for both bulls. This is a trader's kind of a paradise out here, more so than a change in trend. And that's why looking at those monthly charts, if we took a look at just the worst of the worst, even the NDX 100, let's go take a, which has been the hardest hit, but we sort of did that with the NASDAQ composite. There's, okay, it's created a dark cloud cover candle. When you take a look at two-bodied candles out here, on a scale of 1 to 5, this is like a 2. And it's, if you live in Florida, dark cloud cover is like watching the weather report where the weather forecaster says it's going to rain. You could say that basically about any day that you live in Florida. I mean, that's even better than a heads or tails type thing. And it might rain here, but it's not going to rain a half a mile or 2 blocks away down the street out here. The NDX 100 is super strong. You get below 54, 75, 15, and then maybe our skirt starts to get in a tizzy, so to speak. And the question, where does it come from? Usually out of nowhere. Anything can come out of nowhere. All we can look at is really, what are buyers and sellers communicating to you and I just at this moment? Because I don't have a hotline where they're telling me what they're going to do in advance. We have some tools that really help us to identify potential turning signals out here and potential tops, but and you may be right. All I can do is just simply share with you the real message of the markets, which is right now what's being communicated to us. And, if we look at another indice out here, I don't know what you want to look at out here. The semis. Hey, how about the semis? That would make sense, right? They've been hard hit, so to speak, out here. Another dark cloud cover. There's not, and if you look at wave counts, for those of you that are wave count Chapman wave aficionados out here, where are we at with regard to this? Only in wave number 3. This is just super strong. So I'd say maybe it's going to come from out of nowhere. And if it does, you want to be buyer. You want to have some powder, some gunpowder on the side in order to be able to buy, because these markets still want to scream higher. Actually, they're going to kind of do it silently. They're letting everybody else scream that the sky is falling out there, and we don't see any sky that is falling. A request to go take a look at the yen and gold. So let's go do that for Danny. Danny, where do you think the yen is headed to? Just out of curiosity out here. Let's go take a look at the yen. It's found a little bit of fire out here, and it looks like it wants to go try to continue to take out that trend line with today's action. And if in fact it does that, that does not bode well for for gold and silver and or for the treasuries. So you're thinking that the yen is headed higher out here as we take a look at it. And if it is, it's got to contend with this short-term trend line. Yesterday was a bearish reversal signal, but that's vanishing. You like to see some confirmation, and we're not getting confirmation today. So where's it headed to? Danny's headed up that trend line. If it overtakes it, that is a big, giganto problem for gold. Steve Rhodes with TFNN.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Dow's up 88, S&P is up 7. Let's go to Cleveland and speak with Tim. Tim, thanks for calling. Thanks for holding. How are you today? And happy July 4th weekend to you.
Happy July 4th to you too, Steve. I'm doing great.
Good.
I actually am calling about a stock that I own, and TWO. And
have you owned it for a long time?
I think of about 6-8 months, something like that. Got a pretty nice profit on it, and ever since the dividend came out here a few days ago, boy, it looked like everybody was decided to leave it. So I was wondering if the trend has changed on this thing.
So it's the ticker symbol, folks, is TWO, like 2, which is for Two Harbors Investment Trust. It's a real estate investment trust. Now, do you know what's inside? What type of properties and stuff that they own? Any idea? Are they?
I looked at. I own a number of these. I can't remember which one this was.
Okay.
I think this was residential, but I can't remember for sure right at the moment, to tell you the truth.
Okay, all right. Well, let's just take a look at the stock chart and try to figure out, where this thing may be headed to. And what Tim is looking at, folks, is a couple of days ago, back on June 28th, this thing gapped to the downside. And actually, the day before, it gave you a message that it was going to head lower when it created that little bearish, wide-ranging bar, bearish engulfing candle, and closed below a support level, which was its TAS market profile. And the reason why the signal was that it was going to head lower is, are you watching this on TigerTV, Tim?
No, I'm only on the stream at this point.
Got it. Okay. It closed below the structure of the market profile box was a bullish structure, and it said $10.26 should have held as support. That failed. Said you were going to head lower. It had lower. Not the way you wanted to see it, by gapping down with some volume. What you want to watch for here is if this pulls back, and it's likely to pull back into the range of, let's say, 959 to 979, are you still okay if it does that, as far as profit-wise? Okay.
I mean, if I sell, I've done not so bad. That's why I was thinking it might be time to pull out at this point, and then maybe re-enter, maybe at that point.
Because when I look at the weekly chart now, the weekly chart for this is, I'm going to put it also up on a different screen, or the weekly's a different set of tools. So the weekly chart is also now confirming. So just like the daily, it had created this little bearish reversal signal. On a weekly chart this week, right now, if it closes where it does today, it has also created a reversal signal. This one here is called the Three River Evening Star. And if this closes today below 998, it really suggests 949 and 968 would be the next levels that it would trade to. Below that, I can get in the 875 area. So that's what it's communicating to you and I right now. And, short of knowing what they're really holding, and even that might not even help you. This is what buyers and sellers are doing, which is pretty fundamental. And I don't think pulling back into the 949 area is anything that's really bad. It's just that it looks like that's what it wants to do price-wise.
Great. That's kind of what my suspicion was. At least it looked like it was turning. I've got a couple of other opportunities that are similar to this that I think I can hang on to them. But this one, I'm not so sure I want to hang on to. So.
Yeah, that's great. So that's great to hear. That's great money management tools. Even on the monthly basis, this is a shooting star candle, which is the opposite of the hammer. By the way, when this equity here, TWO, it made its all-time high, it did it with a shooting star. This is back in March of 2013. I'm not saying that that's what it's doing this time, but what it is doing is giving you the same kind of, buyers and sellers, they just simply communicate to you and it's communicating the same type of signals. And in this case here, this is testing. This month here is testing, in essence, a set of swing points, little base that it was unable to get through back in 2015. So I think this is going to pull back even further. And, I like the idea of just protecting your profit and look for something better.
Exactly. Great. Thanks a lot, Steve.
You bet. Thanks so much for calling, and happy 4th to each and every one of you out there. Now, markets are going to be open on Monday for till 1. So we'll have programming here in the morning. I won't be back with you until Wednesday, and then it'll just be Wednesday and Thursday of next week. But I doubt that there's there's going to be fireworks. Lots of fireworks, right? Monday, Tuesday, so to speak. I don't know. There's going to be lots of fireworks in the market. To anticipate and expect that the markets will continue to move higher, that would be a good thing because they're not going to get crushed to the downside. The big guys on the street, they're just not going to let that happen. We're back in a seasonal cycle, quite frankly, where the market should move higher through most of July. It does that on average. It's hard to really bet against that, even with the rotation that has gone on inside the NDX 100. Don't get trapped. Don't get trapped out there. We looked at the monthly charts, and they were pretty important signals. I can give you some numbers to be paying attention to that would really just confirm that. Inside the ES Mini, whether it's today or it's Sunday night, it's Monday, what have you, and you see it traded above 24.31, we'll call it. That's just a bullish signal. And if by any chance the NQ overtakes 57.77, that is 110 points away from where it's trading right now. But if anything gets it above 57.77, do not be short. Do not be short. It'll just be telling you the markets want to continue screaming higher out there. Okay, there was a question. Oh, I know what the question was. It was from John in Sarasota. Let me go back and see what he had sent in a request for. Steve, what do you see, if anything, for FMC? So let's go take a look at FMC. FMC, what is that? Is that Freeport McMoran? No. FMC, is it? No, it's just FMC Corp. I think yeah. So what was I thinking? In any event, FMC. So if we take a look at so we'll look at that, John. We're going to look at the monthly chart first. And the monthly chart here says it's run out of gas. And it's run out of gas. We were just talking about shooting stars. And here is a monthly chart for FMC. Takes you back into what looks like March or April of what year? 2014, when it made its high out here. And you can see that prices moved up into that swing point. That was a sign of resistance. You now are going to have, it looks like, a bearish engulfing candle. This is communicating to us at least stock trader wise that it doesn't have the and I don't know about volume. We can check out the volume, but just simply candle wise is just suggesting it's run its course. Now by running its course, price should then pull back to about 61.26. That figure is going to change. Pulling back to 61.26 would be just fine. That would be kind of like your entry price, but we have to take a look at some other indicators as price and how is it pulling back in that area. Now that's on the longer term picture with regard to FMC. Let's take a look at maybe a little bit shorter term time frames such as the weekly out here. So let's see, what is the weekly chart. The weekly chart here for FMC, John says it has approached, it has hit, this was a few weeks ago, that seventh wave, that letter G, that Stevie Wonder singing in the key of G. You know, when you do that, when you see that, you can anticipate that the markets are going to go ahead and do something different. In this case here, it's broken down below level of support, which was 76.60. I do see a nice wide-ranging bar out here from March 31st, 2017. So when we come back from this break, we're going to go look at the daily chart for FMC. We're going to go see where that breakout occurred and be able to give to John in Sarasota where on a daily basis FMC Corp is headed to. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Let's finish off taking a look at FMC. Remember, we looked at a weekly basis. We saw the wide-ranging bar, which immediately said we have to go take a look at the breakout in the daily chart out here. And sure enough, it's a breakout. Big wide-ranging gap, right? So wide-ranging bar and a gap are really one and the same. And so for those of you that believe that gaps get filled, then you should also believe that wide-ranging bars get filled. What the real interpretation there is that price can come back to a breakout area. Now, the cool thing about gaps, rising windows, falling windows, in this case here, a rising window out here, the cool thing is that they really set up two different levels of potential support. So, John, in your case, we know that the weekly and the daily suggested that this will pull back. Well, in the case of FMC, it should pull back and test 69.24. That is where that open gap begins, or the top portion of that gap. Now, the last two set of swing points were from May 4th with 2.3 million, and then on May 18th, 1.8 million. And today you've got 1.9 million shares out here. So really good chance you're going to get down into that area. If it closes below 69.24, 62.10 would be where this would be headed to if you're looking for a buy. The other buy, though, could be 69.24. Just look for some type of bullish reversal signal in order for that to occur out there. And then we'll still have a couple minutes left here. Ruby wanted to take a look at palladium futures. And so we have the palladium futures up on my screen right now. And you're looking at 4 different time frames worth of the market profiles provided to us by our good man, John Logan. And here, Ruby, is my read on what those market profiles are communicating to you and I. As long as price remains above 830.51, you've got the potential that its next bottom has formed. You get below 830.51, that spells trouble. Trouble means 815. Below that, 792. Below that, 778. Now, where price is going to head to here over the next short period of time, or should head to, looks to me like about that, perhaps 844 again. And that's what you'll be watching for, 844.03, 844.85. If price can close above 844, then palladium ought to run to 853 and then 858 and then 877. You have to just look at those in increments as to identify, where there are potential sellers that are set up. But at this stage here, you've got really good support in the 830 to 834 area. If price is able to stay above that, then you have an opportunity for this to run to those other price levels that you and I looked at. So in the last minute or so out here, what else is it that I can communicate to you on behalf of the charts that you and I look at? Well, in the case of the New York Stock Exchange, its chart remains long and strong. Remember here, it was just a few days ago. Let me come back here. It was just a few days ago. Let me see, where's the advanced decline line. There we go. We got that up on our screen out here. In fact, you're not too far away from it today again. I'll be a son of whatever it needs. I need to be a son of out here, and because I'm probably son of all of those things, but just like most of you as well. But just speaking on my own behalf, back here on June 28th, you had the advanced decline line close at a new all-time high. That reading was 405.640. Right now we're at 405.247. It's actually ticking up and moving higher. We're really very close to maybe even on Monday getting to another new all-time high. And the reason why that is so important, and I can show you a number of daily stocks in the indices that should suggest that this market is getting ready to move lower. I can show you a bunch. The problem is, and it could pull back. I'm not out, I quite frankly, I hope that it pulls back. Just makes it a lot easier for the buy versus the sideways move out here. But in this case right here, a bear market does not start with the advanced decline line at new all-time highs, and that includes June 28th. Folks, stay tuned. Your favorite polar bear in mind, David White, is up next. After that, we've got the Tom O'Brien Show. So have a terrific holiday. We'll see you again on Wednesday. Don't eat any hot dogs out there. They're not good for you. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.